I regularly talk about how home loans are about more than interest rate. And today I've got a great example of that. A client came to see me recently. They were looking to borrow $60,000 to $80,000 to complete some home renovations. They've got a strong income and their home loan was only a small portion of the value of their home. So on the face of it, it all looked straightforward, except that it wasn't. When we ran their credit report, which is part of our usual loan process, we discovered that their credit rating was dismally low. Their home loan repayments had been kept up and were in good order, but they had several credit cards and their repayment history on those credit cards was very sketchy. They had been between 1 and 4 months behind on various cards in the last 2 years, and it meant that no mainstream lender would consider lending to this client. This was a huge shock to the client, and it meant they faced a decision. They either had to live in a half-renovated house, which meant they had no bathroom, or they needed to look for a lender that was prepared to lend to them. And there are non-prime lenders that would consider lending to the client even with their credit score the way it was. So we were able to organise a loan for the client at around 1% above the rate that they would otherwise have got with the best lenders around. Now this wasn't ideal, but it was a solution that the client needed. We expect that with 18 to 24 months of good credit card repayment conduct, the client will be in a position to then refinance back to a mainstream lender at the best rates. So this is only a short-term measure, but it's a great example about how organising home loans is a lot more about finding solutions than it is about finding the cheapest rate. Whilst this scenario is not a typical one, you'd be surprised at how many scenarios are non-typical. And that's why a good mortgage broker is essential when you're trying to organise finance. If you have a scenario you'd like to discuss with us, you know where to find us. Otherwise, stay tuned for more content and please like and follow.